every major bull market in gold, from 74 to 76, 77 to 1980, and 2000 to 2011 has seen the price of gold go up 6 to 8 times, really 7 to 8 times. So if you look at the bottom of this cycle is around $1,140. So if we have that same kind of experiences in the 3 previous gold bull markets, you're talking at about
7,000,
$8,000 on gold price.
Recently, Gold Investor Research posted on Twitter, using a debt and money supply argument along with a cyclical input, the analysis suggests gold getting up to $8,000 in 2027 to 2028. Brien Lundin, president and CEO of Jefferson Financial, suggests that if historical trends persist, gold prices will surge to an impressive $8,000. Gold has outperformed most other major asset classes in the past 12 months, Melek wrote in a recent report, attributing it to the yellow metal's ability to resist rising interest rates and its value as a safe bet against inflation. During the COVID-19 pandemic, gold prices increased substantially. Lundin anticipates that gold could see a 30% increase. Studies have provided mixed results on the safe haven characteristics of gold during the COVID-19 pandemic. Several analysts and agencies forecast gold could rise above 10 to 15% or even more in 2023. While Saxo Bank forecasted gold price to increase up to $3,000 in 2023, Societe Generale forecast gold price to decrease by $1,500 by the end of 2023. According to Lundin, increasing gold prices could lead to significant share prices and margin boosts for mining stocks and gold producers. According to Canaccord, Resolute Mining has reported a 47% increase in Mandy resources to 2.72 million ounces, previously 1.85 MOZ, and an 11% increase in total resources to 3.53 million ounces, previously 3.18 MOZ, as a result of infill and down plunge extensions. Investor allocation to gold stands at its highest level in 11 years, according to an analysis by a J.P. Morgan strategist. Now, we are presenting you a glimpse of Brien Lundin's insights from his recent interview with Wealthion. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I think we can be confident that something is on the horizon, and I think the markets are starting again to factor that in. The fact that gold has, gold lost 1% according to the World Gold Council reporting yesterday. It lost 1% in the month of August. And that's a month where Treasury yields soared, where the dollar index catapulted higher, and yet gold only lost 1%. Now, that doesn't say that there aren't some people selling gold. What that does say is there's some big players buying gold in the face of those kinds of headwinds. To keep the price supported, there has to be very strong demand out there. And I think because gold is one of the most powerful predictive mechanisms in the investment markets, I think the people buying gold are betting that we are going to have some kind of a turn in this majorly hawkish monetary policy in the months just ahead. Let's look at, say, COVID. I think the bottom was $1,140 an ounce or thereabouts, and we hit close to 2,000 or thereabouts. In the kind of environment we're talking about, not be unusual for gold to gain 20% or 30%. Gold gains 20% from this level. You're talking, what, $2,300, $2,350 or something like that on the gold price. 30%, you're probably talking $2,500 or thereabouts. That's kind of typical for a gold bull market. In the early stages of the 2000s bull market, when gold came off that low at $252, it quickly doubled in price. So, you get at numbers that would have a few years ago seemed absolutely crazy, and today, to some extent, seems surprising. But when you work out the percentages at numbers this high, it is very easy to get to a $2,300 to $2,500 gold price over a year or over 2 years. And that just changes everything when you're talking about mining stocks at their current levels. And when you talk about gold producers' margins, when you add another $300-400 to the current margins, that you're talking about tremendous increases in share prices in a sector that is already washed out right now.
Despite the absence of a strong and lasting uptrend in gold prices, Lundin holds a positive outlook for the sector. Western investors' interest in gold led to an increase in its rate from a minimum of $1,160 in the summer of 2018 to a record high of almost $2,073 in May 2023. During this time, the precious metal has become one of the most attractive financial assets on the planet. Lundin emphasizes the performance gap between metals and mining stocks, as gold price increases could revive the undervalued mining sector. This week, gold futures closed at $1,942.50, down $24.60 per ounce, or 1.25%. Gold stocks, as measured by the NYSE Arca Gold Miners Index, ended the week lower by 2.76%. AOCE said global mine production rose by 1.5% year-on-year to a record high of 856 tons in the March quarter of 2023, driven by increased production from the major producers and ramp-up of new projects in Mongolia and Brazil. Let's get back to the interview.
I think there's been some competition and other ways to leverage the metals out there, but I think the primary reason is that markets don't really care, investors don't really care what the price of anything is. They don't care what the price of the metals are. They care where they're going. So we have not had the kind of sustained uptrend, kind of consistent uptrend, the kind of breakout that we really had expected. We've had essentially a triple top in the gold price, around 2050 or something in the gold price. And we haven't really firmly, decisively broken through to a new high. Once that happens, I think it's going to attract a lot of money into the sector. Now, the triple top doesn't sound good unless you look at the broader technical pattern in the gold price, and you see a very classic multi-year cup and handle pattern. So that triple top is essentially forming the handle on the cup. And that technical pattern, that formation, projects to a gold price of $3,000 or above. So that again is one of the reasons why I say we're really at that point where a breakout, and again, only about a 6 or 7% increase in the gold price gets us there. A breakout to a new high really brings a lot more money into the market, and I think ignites that next stage of the gold bull market. Yeah, I think you said it perfectly, Adam, that gold and silver are, I think, looking at this current state of being of positive real rates as being temporary, and are looking a bit further down the road that something is going to come up to force the Fed's hand, that the cycle will repeat as it inevitably does. And when that happens, it will likely happen in some kind of a crisis situation, and it will therefore demand the kind of response we've seen from the Federal Reserve. And that's the big bet on the metals right now, that this will be the next big thing that will send, in gold's case, prices to well above the record high. And in silver's case, far higher than where it is right now. One of the comparisons I've been making a lot for people to set that up in the metals market, the metals have been holding in there, but the mining stocks have not. The mining stocks have leveraged the metals to the downside and have not been performing really across the whole spectrum, from the major producers down to the junior exploration stocks. So the question for a lot of people in this industry or in this sector is, what is going to get them to move? And I've been drawing on my experience back in 1999 to 2000, that double bottom in gold. When gold hit $252 an ounce, the mining stocks were completely bombed out at the time, as you can imagine, when we had that kind of a bear market in the metals. but they gradually turned over the next couple of years as we had about a 2-year uptrend, consistent uptrend in the gold price. The mining stocks started to respond, and then we ended up with a near decade-long bull market that a lot of people made a lot of money in. Compared to today, the mining stocks are bombed out again, especially in relation to the metals prices. With gold about 6 or 7% away from an all-time high, we won't need 2 years of an uptrend to get the mining stocks ignited again. We'll only need about 2 weeks. So if we just have a little bit of an uptrend in the gold price, which where we are now, if we gain 5-6%, we're going to be at new all-time highs. That will really light a fire under a mining sector that is completely washed out right now.
Despite the absence of a sustained upward trend, gold performance has left many intrigued about the future of metal. What are your thoughts on the gold potential trajectory? Share your thoughts in the comment section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel, and turn on notifications to stay informed about our latest videos covering more exciting topics. Thank you for watching.